guarantee.
The whole guarantee.
The whole Guaranty Mortgage
Almost.
and the entire
Oh.
team. Not all.
We don't let all of them get out.
I'd love to walk up to you, Sandy.
Hey, that was pretty good.
All right, let's do that.
I wanted simply the best.
Yeah.
Gonna play for a minute. I guess we're really ready.
You might want to know.
It is big.
Hey,
And the reason I picked up, but I was thinking, about the industry, crazy, right? The industry, but kind of the positive on that. I mean, it's high energy. I was looking at other words for crazy. High energy, full throttle, right? We're always full throttle in our office. Wildly exciting most of the time, and it's never a dull moment. So those are some of the things we're going to talk about today. Last week, Nikki and I talked about the loan originator and what we did, right? It was either. We were like the quarterback, we keep things calm, we communicate with you guys, we try to. This is behind the scenes. So they're the real people that make work and come together. So we wanted you guys to meet some of our staff.
So we'll start with each of you introducing yourself, your job title, and how long you've been with Guaranty. Starting with you, Sandy.
Hi, I'm Sandy Tate. I'm the president of Guaranty. I've been there from the inception, which is about 27 years now.
Shelly Kersey, I'm an underwriter, and I've been with Guaranty. I was trying to think. Gosh,
You left and then you came back, so I'd say about 15 years.
about 15 years.
I'm Christy Perry. I am Joy and Nikki's assistant, and I've been with Guaranty about 5.5 years.
and I'm Eddie Kirby. I'm the ops manager, and I'm in charge of washing Sandy's car. And I started with Sandy 27 years ago.
Okay. So that's a little bit about it. We're gonna learn more. All right, don't worry. All right, so we're gonna kind of ask questions individually of these people, and then we're gonna ask kind of whole panel questions. But you guys think of things. This is for you, okay? We want you guys look for you. So think of things. I want you to ask the question.
Okay.
Okay, perfect.
We know you're.
Yeah, Mom.
Okay, so and some of you I know Joey. Shelly was actually when I was gonna get in, I got Shelly, but she was actually a loan officer here with me, like Nikki. We were here in the office. So anyway, we'll learn some background about them. All right, so Sandy.
Yes.
So give us the backstory of Guaranty Mortgage. How you started when, maybe your background, how you've been in the mortgage business, not just Guaranty. Okay, give the backstory.
I've been in the mortgage business all my adult life. And we started Guaranty because every place I worked started going out of business, or they sold me. So I said, well, it's best now that I just do it myself. So that's when we started Guaranty. We're a mortgage banker. We went into a joint venture with a very large bank out of Guaranty, out of Milwaukee. So they own 50% and I own 50%, or a company owned 50%. And that went on for a long time. They're wonderful partners and we love them. But you know what happened to the banks in 2008, 2009, 2010? They all went down. And so did Guaranty, my bank partner. So then now our partner is called New Reds. They're the second largest mortgage banker in the country. So what that does for Guaranty, because we are a mortgage banker, that means to y'all, we control everything. We originate it, we process it, we underwrite it, we fund it, we close it, and we sell it. And we sell it to our partner.
Can you expound on how important that is?
It's extremely important because
It's all
this is who I'm
connected.
talking to
Right,
when
it's
we
all
have a
connected.
troubled loan.
Yeah.
She and I talk about it and we make a decision together. We're not talking to somebody in New York. We're not talking to anybody else. We're just talking to each other. And that's really really, we never make a bad loan, never. But sometimes we make a loan that, you know, and just hope that it does, that they pay, and they all pay. They always do. We have very low delinquency. So one thing about GMS or Guaranty, we are a purchase company. We rarely do a refinance. We do a refinance if it just slaps us in the face. Our direction for 27 years has been y'all and builders. That's where we get all of our business. We have been your strategic partner for 14 years. Some of y'all don't even know that, but we've been here for 14 years, and we've loved every minute of it. Joy, this is Joy's home. She doesn't have another office. So, I mean, we've really enjoyed this, but we are a total purchase company. So we're here for y'all. That's what we're here for. So is there anything else about Guaranty that I missed?
What about the red shoes? Is there a story behind the red? You don't have them on, but.
I don't have our marketing. We have a little marketing department, and since I was at Georgia, which was 100 years ago, I've been wearing red Converse, and I've only had like 3 or 4 pair because I wear them till they just slide off my feet. So all these people that work with me and are friends with me, they see me. I wear them all the time. So our marketing department has used them in some of our marketing.
And you'll see in the resource room in the back, there's a poster that has red shoes.
The red
And
shoes.
if you go to our website, you see the red shoes, that's, Sandy's red shoes.
Yeah, just because I wear them all the time. Somebody asked me the other day, it was funny, I was at this party, and they looked at my shoes and they said, "Are those orange?" And I went, "No, they're old." It's faded.
And Sandy was going to point this out a couple times because 3 people up here have been loan officers. And how many years were you a loan officer? I mean,
Oh, I was
Before.
loan officer probably 20 years.
yeah.
Yeah, I mean, that's, and Eddie
Yeah.
wanted to talk about this.
And-
But
yeah,
you can deal with that.
But everybody that's making a decision on your customer has been commission loans. And that's huge because our mission, and we have one mission, is go to the closing table. Because I don't make any money, and none of these people make any money unless we're sitting at the closing table, just like you. So because we've lived that life, we just don't turn anybody down. We don't let it get that far.
And that's why I wanted to bring that up, because being a loan officer, I feel like, and going into these positions, they have worked with realtors. They know the sense of urgency, the timelines, the contract, all of those things. So it's not just a task list all the time, like some companies.
And if y'all don't know, that's very rare.
Yeah.
Because
Right.
most underwriters, processors, they have a different mindset. Their brain works differently than loan officers. So having an underwriter who was the loan officer brain for so long adds more value than you could even understand, because they understand something they would have never understood otherwise unless they were a loan officer.
And if she ever slides back, she's always got me to say, "Oh, Shelley, we don't care about that."
I couldn't have said it any better.
You can do that, yeah.
I want to just make a point here. Now my history is a little longer with you guys than
Yeah.
most. It's
Yeah.
basically a year after the beginning.
Yeah.
What I love about these guys is that when you have, some of you know my number one rule about real estate is never, ever put somebody in the car until you know they can qualify.
Yeah.
But if you bring them something with a 485 credit score, they're not going to dilly-dally around and try to make it work and then fail at the end. They're going to tell you up front, that's not going to work. It's not going to work for them or anyone else for that. But they're going to tell you up front. So that's when you were saying, when you get to the point where there's a loan in process, you're good to go on that loan.
We're going to make that one.
It freaking closes.
Yeah.
Every time. And I've done literally, well, between us, thousands.
Because that was my deal with the builders when I first the company was a builder company for years. I said, if I hold it 7 days, I'm going to make it. I don't care what it looks like. If I hold it for 7 days. And we just got used to that. We just got used to that philosophy.
So
So Sandy, things have changed over the years.
Absolutely.
from like when you were loan officer and probably
Yeah.
handwriting everything. And now we have AI and
How
we have.
old are you?
All of it.
You know, I was thinking about this last night.
As long as you have it.
I
Yeah.
know.
Well, he's a lot younger.
Yeah.
I look better, but
Started
he is
with
a
you.
lot younger. But, you know, when I first started at Cato Federal, we had no fax machine. We didn't use computer. Loan officers didn't have computer. We did everything by hand. The Cato Federal was such a big lender. They were the largest lender in the Southeast. They owned a courier system. So if as a loan officer, if I had to send something to your office, I just called the courier up and he'd run it over there. He'd run it. And the law firm was on top of our building and we had to use the same law firm. So, you know, we just ran up and down the stairs. And then we got a fax machine, but most of y'all aren't old enough to remember this, but those fax machines, the print disappeared. So we had all these loans in the vault and we would go in there to get them because they would, you know, the customer would want something, a new house or whatever. And we'd look at it and everything was blank. Because we didn't realize that it just over days and weeks, it just disappeared.
Had a bunch of blank paper.
Yeah.
I didn't know that.
Yeah. So they stopped all the FedExes. I mean, they stopped all the faxes until we could get. And the fact that now everything is electronic, everything. We don't. I mean, if I were to tell Shelley, she would have to look at it in folders like we used to. She would quit. It's so time consuming. And when we recently moved across the hall. That's all, because we're around the corner. I forgot to say that we're just around the corner. But we recently moved and we had 20 years of paper. It cost like $4,000 to shred it all. But we had files, you know, on everything. I mean, it was huge office and they were everywhere. And that's how we had an underwriting sheet where we would write and I would say, we're not going to do that. And I would put my initials beside it and all that. We don't do any of that. It's all
So you
electronic.
don't even know what a fax machine is.
Oh, yeah. Just thought the antique. Oh, yeah.
Yeah, I mean, nobody faxes anybody.
But that was kind of my question, just major changes that you think.
Yeah.
You know, and a lot of it is electronic. I remember when we first got our website and people were applying online and everything is, and the reason I'm making that, it makes it faster, quicker.
Yeah, it's so
and make it
fast now.
pop-ups. Maybe you can cover some of the things we do behind the scenes that do make
Well, I
the
mean, for
transaction.
years, we had up here, when we first met y'all 14 years ago, we had 61 people. Because that's what we need to push that. And now
Oh,
we've
yes.
got 13. So it's totally different.
Yeah,
Can I just add one thing?
sure.
When I started in 1982, I started off as a real estate agent, then became a loan officer. The jumbo loan limit started at $107,000. And we had conventional, FHA, VA.
That was it.
Now we've got these smart series programs. You know, that's the biggest change that I've seen is that people say, oh, well, can't get pre-qualified or can't get qualified for a loan anymore. When we started out, it was manual and it was a 28 and a 36 front and back end ratio. The housing allowance couldn't be over 28% of your gross income. With your other debts, not more than 36%. Shelley all day long is underwriting FHA loans now that go to 55.
I didn't realize that.
Yeah. I mean, that's
Sporadic.
and I tell you, the biggest difference probably is because we've got all these student loans now. I mean,
Yeah.
it's amazing that a teacher that's going to make $60,000 a year comes to us and has $200,000 in student loans.
That and a jumbo loan is not $100.
No,
Dollars.
no. I mean,
Yeah.
and even if you factor in inflation, 107 is like 345 today. You know, conventional goes up much higher than that. So it's
Yeah, it's
big.
amazing.
It's big. Did you have a question?
Yeah, I'm curious. What are your thoughts on how do you think AI is going to impact your business and the things that will change and streamlining processes to make it quicker, more efficient, better? What are your thoughts on it?
AI, we're using AI every day. and we have been for a number of years. Yeah, it's going to change how we present to y'all guidelines, things like that. Our guidelines will all change, not all change, but they'll be now handled by AI, which is much smarter than having Susie down there deciding what was going into a guideline.
Isn't that what desktop underwriting kind of is?
Yeah.
It started.
Which we started years ago.
For years, all of our underwriting has been AI. That's what it is.
Automated.
It's all automated. Now, Shelley looks at what the automated tells them, but we can, if we're going to sell it to Fannie or Freddie, we got to go by what they say, or we have to do what's called manual. Sure.
Selling it to Fannie or Freddie.
Oh, yeah.
Yeah, of course. Everybody knows about that. I mean, all the loans in the whole country. That's where they're going. They're all going to Fannie
Do you want me to
or
say
Jan.
something?
Sure. Yep.
So,
Yeah.
yeah, with AI also, now like the loans go through so many behind the scenes audits also when it's first submitted, when the processor gets it before I get it, after I get it, when I clear it to close, it goes through all of these audits, making sure like everything's in the right place and everything's met and cross-checking everything. So that's happening already too.
So that stops. See, what's really wonderful about how we work is when she underwrites it and we close it, and Diane, our closer, closes it, it's not going anywhere but directly to Fannie. It's already been audited. AI has already looked at it. They've said, yes, we want it. Go. So there's no middleman. There used to be a middle person that would look at it, do the pages. I don't like this page. That ain't it. Go straight in to Fannie and Freddie.
It's important to note, there'll always still need to be an underwriter, an actual human. I don't think that'll ever change.
And we tried to change that and it didn't work.
Yeah.
Yeah. We tried to cut out the processor. We tried to cut out the underwriter. It just doesn't work. They tried to cut out the loan officer. It just, it works for about 6 months and then it just doesn't work.
I'll let you.
So Christy, our loan officer assistant, tell us what a loan officer assistant does and what you do for Joy and I.
So, when they get a contract and they have a borrower that's decided on their loan program, I go ahead and start getting things ordered right up front. I order the appraisal, I get in contact with the attorney, get the title ordered. If they know who they're using for their homeowner's insurance, I get in touch with them. I look over all their documentation, which they usually both have a lot of it already to pre-approve them, but I'm going through it and double checking to see if we have everything, if there's anything else we need, so that it is all neat and tidy, and hopefully we have everything back by the time it gets to our underwriter.
And
She's
that's
gonna-
important because again, it streamlines it.
Yeah.
Yeah,
It's checks and
makes it go
balances.
real
It goes
fast.
from me to her,
And I was a realtor before I came to Guaranty, so I understand a lot of the need of the sense of urgency and getting everything as soon as possible. So that I'm the one that hasn't been a loan officer, but I've been a realtor.
That's right.
And she's
So
good
we'll let you in the back.
Yeah.
She's good at looking at contingencies too and like.
Yeah.
she's
She's
putting
the
up file
liaison,
gives,
basically,
Yeah.
between all parties involved.
Yeah,
So-
she's in between don't you agree? She's in between the production. She's a production person and
Right, so she's the liaison between a loan officer and the processor, underwriter, closer, closing attorney, all the other parties, so. Christy, what are some of the resources we offer to make the process more streamlined?
So the borrower can give us access to their employer and both their bank statements. If they give us approval, we can go ahead and get their pay stubs and their W-2s and save them the trouble from having to send it to us when we need them. Same with the bank statements. We can't get into their bank account or anything like that, but we can say we need an updated bank statement because their loan is closing a little further out. That way we can just go retrieve it ourselves and not have to bother the borrower with one more thing when they have so much going on, getting ready to move into their new house.
Yeah, so they can do an electronic employment or asset verification where they may not have to provide us any documents at all. Wonderful, right?
I wish more people would link
Super
it,
handy.
but.
Yeah, if you could encourage your borrowers to sign up for that, that would be great.
It is a lot easier.
It would
It's a
save
long
them
way
trouble
since
too.
the fax machine.
Yeah.
Oh, it is. And we're
Minute
not ever in their bank account. We're never there in their bank account, but they're down uploading what they want us to see into our system. I mean, it's a wonderful, if a customer does everything that we've asked them to do, I mean, it just goes like that.
So
It's done. It goes so fast.
Even when we're doing the pre-approval process, if they've done that, they apply, I can get the pre-approval done right then.
Yeah.
Just
so-
really.
Basically connect, most of the W-2 employees, that it'll connect their payroll system.
Yeah, that's
They
what.
made it pre-approved way before they find a house they're looking for. So then again, when we need an updated, one of those updated things, it's just, poof, we have it. So you don't have to bother them.
Say that again, they get pre-approved before they.
But
get-
That's
That's such a good idea.
It's a very good idea to talk to joint venture before they go
And to
housing.
go back to his question about AI, if they do that and we have in the system, their W-2s, their pay stubs, and that's through a system called Argyle. We've got a system called Account Check that does their bank statements. When we run that AUS with either Fannie Mae or Freddie Mac, it gives us warrants and reps, which means you don't have to do anything further. It's approved. And that's what we want.
And it also means that Fannie can't ever come back to us and say,
Yeah.
you did this wrong,
Yeah, which is what we really want.
which we really love that part. And you know, we have we haven't talked about PIWs. That's another
Yeah.
thing. Where
Are
you,
we still seeing a lot of that?
oh, yeah.
Oh, yeah.
Oh,
That,
yeah.
does anyone know what that is?
Property inspection waiver.
Property inspection
Yeah, I
waiver.
just call it appraisal waiver.
Yeah, it's an appraisal waiver. So some people, if Fannie has already loaned on that house, and we are seeing it in some new houses, which is weird. I don't know why.
And new
But-
construction.
Yeah.
And new, I don't
Only
have-
if it's a very established, like only a lot.
like we get them in,
Closed
in
and been done.
Okay.
but the thing about it, because they've already seen that house. So they go, it's an 80%. I think they look at everything. They claim they don't, but I think they look at the credit score. I think the system looks at everything and says, it's an 80% loan. We've already seen this house 7 years ago. Let's not appraise it.
Huh.
So we have no appraisal fee. Have
They
no
put out
appraisal.
that data in there, like for comp, that's where I
Yeah.
think the construction, if there's enough cost in the area,
If there's
it's
no
just about the value. And you guys always say, oh, the lender gave me an appraisal waiver. It's not really the lender that's
Uh-uh.
giving them the appraisal waiver, because you guys can say, oh, I'm like, it's really a Fannie Freddie.
A Fannie
It's
Freddie.
only
A loan
conventional
for-
loan.
Take
a loan
the-
from-
Just go ahead and take.
And it's
So,
only,
okay.
it's only on.
Just
condition.
Yeah.
It's only on- Not government.
So, but what that does, I mean, your customer doesn't have to have an appraisal. It's wonderful. You want to close in 8 days, do the employment.
And then you have no
verification, the
discussion
assets, the
about
appraisal, all of that.
Did you, so this is something new for me, that's only on convention?
Yeah.
Yes.
Yeah.
Fannie and Freddie, I mean,
No.
No, HUD won't allow it.
that doesn't,
Yeah,
do that.
HUD.
I didn't know that.
Right, because of the time limit, you know, it's only.
Well, it's a government loan too,
Yeah.
they're guaranteeing. They gotta,
Well, it's normally high LTV. You know,
Less
VA is
down
100%.
right.
That's down payment.
Did you have a question?
Yeah, so did you have a question?
I was wondering if the ratio of 28 and 36 is still applicable.
I'm sorry.
Right
Steve.
now.
No.
Oh, no, oh, no. That's what I was saying. Now we go up to 55 on the back end. That's, you know,
And VA doesn't even care about the
Yeah,
ratio.
VA
They don't
cares.
even care what
Yeah.
it has.
your residual. What's left over after you.
Because VA is kind of logical.
USDA is a little bit more particular about the ratios, but they'll still issue an approval sometimes. So, yeah.
She's an expert on that USDA.
Yeah.
Yeah,
we do.
Oh, for
They're
sure.
fun. Christy, last question for you on this. So one of the things you make sure we have is proof of homeowner's insurance for the customer. Tell us a little more about that.
Homeowners insurance, I'm gonna say this is a little touchy subject in our office.
For one reason or another, I'm not sure why, but it seems to be one of the things that the customer doesn't want to do right away, or just gets put on the back burner because they have so many other things to be doing. But it is really important to talk to your borrower, and I know Nikki and Joy do also, when they go under contract, to start getting some quotes. Start speaking to see who they'd like to go with. The rates have gone up. It takes a little bit longer for them to decide who they'd like to go with, what rates they like. It's also super important, not important, but helpful if they're speaking to somebody who they can directly get a hold of, a local homeowner's insurance, not a 1-800 number, similar to you guys and us, it's in all of our jobs, it's super helpful if we can get in contact with the person directly. Makes everything so much smoother. So
It does.
it is important that they start looking into that sooner rather than later, though. To help get that moving.
Good answer.
Eddie,
All right.
why don't you tell us what an operations manager does?
Pretty much what Christy tells me to do, and Sandy. No, I'm kind of like the custodian wrangler, kind of making sure everything keeps moving along. If there's, a little bit of a mess, I got to make sure it gets cleaned up. And it's
A
really,
mess.
well, I'll tell you, one of the biggest ones is trying to get the homeowner's insurance.
I talk a lot
There
about
are
homeowners.
the three things that are going to delay a closing, and we make closing dates, but it's tough sometimes. And the three things, one is homeowner's insurance. I don't know why, and it's always been this way. They just wait, they wait. Homeowner's insurance, title from the title company. Picking the right attorney is very important. And it may not be the attorney that takes you out to lunch all the time that does the best job as far as we're concerned. I will tell you, and O'Kelly Sorhan's your partner.
They're fabulous.
Fabulous.
They're
Fabulous
We
attorney.
love them.
Behind the scenes, that's what we're looking for, is behind the scenes. But attorney that gets title to you. And then the third thing is the appraisal. Because there are so many stipulations on what contact you can have with the appraiser, how long they're going to take, and we can do rush appraisals and all of that. And we're very good at that. We're probably one of the best companies when it comes to dealing with our appraisals. But the title and the homeowner's insurance, those three things, that's what slows up getting the package out. So
Just
But
so
that's
y'all
what-
know, on the homeowner's insurance, to give you an example of why we care so much and why it's so important. For example, USAA, they're a big company. They don't typically have insurance agents. When your customer uses them, they go through online or an 1-800 number. If we need to change the loan number, for example,
Or the closing.
or
Closing
anything,
date.
closing date,
Closing date.
anything. The USA has to get authorization from the customer before any changes can be made. So they're wanting to get the customer on the phone to get that approved before any changes can be made, which is inconvenient to your customer, plus takes time, all these things. Sometimes multiple things are changing. I mean, I have one that the closing got delayed several times because of the sale of their house. And so we've had to change the closing date 4 times on a homeowner's insurance policy. I think Christy would quit if they were using for that one. But anyway, just to give you an example of why.
Work from home, so nobody hears.
And if you use one of our transaction portals,
That's right, there's some great.
they
transaction
handle
others.
that.
What?
Haven't you, Jessica?
Insurance. Now, Eddie, going back on you being a loan officer for years prior, what advantages do you think that provided in your role as an operations
Well,
manager?
I mean, I was a loan officer for 35 years. I've been in office for 8. It's just production oriented. It was making sure that the customer got to the closing table, with a smile on their face, because we wanted their business in the future. So if customers got a smile on their face, I knew my real estate agent was going to have a smile on their face. And everybody gets paid. That's what it's all about. You can say all these other things about culture and all of that stuff that is important. But really, the bottom line is you got to get a paycheck. And the only way to get that is to get that loan closed at the closing date.
So to discuss, some of the challenges we face during the mortgage process, things we've been going through, tax transcripts are one of those challenges. What can you tell?
Well, self-employed borrowers, we get tax transcripts back. What that is we're through a company, we send off to the IRS, and the IRS does not give us the entire tax return. It's just a transcript, it's the numbers basically. to make sure that it matches up with the tax return that the customer is giving to it. And I think so far 4 times this year, transcripts came back with different numbers than what the customer gave to us. And it was all an honest mistake on their part. In one instance,
It wasn't very honest.
well, in one instance, the CPA
That
actually
was mine.
fell on the sword and said,
Yeah.
I
The CPA
I filed the wrong
messed up
tax.
every time.
I mean, can you
Yeah,
imagine a
messed up.
CPA? And it was a CPA, it wasn't, you know.
I think there was a lot. more
Just
to
to
that story.
explain the error she made, she had, if the customer didn't know, he was gonna have to pay 128,000 in taxes. The correct one was only like 36,000 in taxes.
Yeah.
She messed up big time.
So tax transcripts are very important.
CPA is a very big word.
More letters than they had come.
So,
Okay,
did you have another question?
Nope.
No?
we're gonna kind of speed it up.
Okay.
Yeah, we gotta go, because they
Okay,
got.
Shelley, this is probably, now you guys gonna have questions for her, but, okay, I'm not even gonna get back to questions necessarily, but, okay, tell us what an underwriter does. We'll start with that. I know it's a big job, but tell us.
Basically my job is to review the file once all the documentation is in. So the bank statements, the pay stubs, the W-2s, all of that good stuff. Calculate the income, make sure, it matches up and it's correct for the file for me to make a decision. Once everything, I've gone through the file, then I reconcile it with what's actually on the loan application. I run it through the automated underwriting system, make sure it read it correctly. Sometimes it doesn't, resolve all of those issues. And then once I have a good AUS approval, then I go into our system and I actually enter the approval. So I have to go through every section from their credit report to the income, to the employment, to the contract, to the appraisal, every single section. Once I've done that, actually issue the approval letter, give it to the loan officers for them to get it out in time for it to be, meet the contingency. After that, the file goes back to the processor and she'll communicate with the customer, okay, everything looks good. We might need an updated pay stub, whatever, I don't know if it's closing farther out. And once she gets that documentation, the file comes back to me and then I clear it to close.
Let's talk about a couple things you mentioned there. Conditional approval, you said approval letter.
Uh-huh.
Yeah,
So you guys know when she gives us the approval letter, is it typically a conditional approval letter? I don't think we ever have a file that's like clear, close, she gets it. Because there's still things that we do behind the
Yeah,
scenes that we need. I might not know that, but there's a lot usually we need. But so tell them what a conditional approval is.
Conditional means like basically it's approved, but we need these certain items to have it 100% perfect. I'll tell you, and I've worked as a loan officer. I've been a processor for years in the business, over 25 years. Used to the approval letters were 2 pages long.
Yes.
That's lots of stuff to have to get. My goal is to not have to look at that much a second time. I want to get through it, be as complete as possible. Ask for whatever few items we absolutely have to sell it to Fannie or Freddie, and then move on. So,
Yeah,
and
we love
but
that.
yeah, the conditional is it's approved. We just need certain items, whereas full approval is.
and none of those conditions would make us say no.
Exactly. Yeah,
Where
we're
she'll
gonna
never,
close the
yeah,
loan.
if she
Yeah.
puts a condition down, if she knows if we cannot get it for some reason, we're still gonna make the loan. We're just gonna have to
We
rearrange.
figure out another way.
Another way.
And some of those conditions may not be anything needed from the customer either.
Yeah, it might be
There's
our
a lot
own.
of internal stuff.
I might be waiting for the appraisal to come in, the insurance, because I have to make sure all of the final numbers are exact. So,
After COVID and the Great Resignation, which I'm that one from this week.
The what?
Do y'all know
Great
those?
Resignation.
We call it the Great
Nikki told me
Resignation.
that.
Great resignation. No one has heard that?
Yeah.
Okay, it's in 2022, I think it started, when everyone quit their jobs voluntarily
Oh.
and decided to
Do something else.
do something else or maybe not work or whatever.
And that's what I feel like has changed the most. So many people are entrepreneurs. They have variable income, which is what I want you to talk about. I feel like, correct me if I'm wrong, self-employed borrowers are the most challenging, and there are a
They're
lot
what?
of self-employed borrowers
Okay.
and these
Would that
entrepreneurs and these
include
people
real
that quit their
estate?
jobs. Yes, absolutely. So,
Well, y'all are kind of easy, to be quite honest. Y'all are easy because we've got KW to ask.
Yeah.
but after the COVID, what trends have you noticed in income and employment stability? We use that word a lot in our world and history.
I mean, very rarely do you see a person who's been on the job 20 years anymore. Usually they've had multiple jobs. Now on the loan application, you only list the last 2 years. We don't care past that typically. But yeah, I'm seeing more jobs. We really only need to verify the current job and what their employment is, but we do want to make sure there's no huge gaps. And if there are, we just want to understand what happened, that kind of thing. But I mean, so just more of that, variable income.
Tell them what that means.
So that's basically people who are not a W-2, just straight salaried person. So it could be hourly and they don't work the same hours every week. It could be their straight commission. Could be it's primarily bonus income, overtime, that kind of thing.
Tip income,
Tip.
Income, they
Not
have a
Uber
roommate,
driver.
and
Yeah.
those kind of things.
anything that's not set predetermined.
Any doctors falling?
Really, most doctors are under a
They're
contract.
normally under
Yeah.
contract.
Traveling nurses, what do you say about?
Traveling nurses are hard.
Yeah, she said they're paid so
Yeah, roommate income. Roommate. She says you lose a roommate if they don't have a roommate anymore. You use that word. Did you say something?
Yeah, I mean, but variable income to me or to Shelley would be, we see a lot of people that might have rent a room, rent the basement. That's kind of, variable to us. Sometimes they've got a lease, sometimes they don't.
And because people have changed jobs so much, a lot of times we can't use bonus income.
Yeah, we just
They might make a lot of money, but if they've only been doing that for 6 months,
got one bonus.
so that's a lot. I just want y'all to know
And
that because when it gets to Shelley, she's analyzing that. It's got to make
Yeah,
sense.
and the guidelines used to be super firm of they had to have a 2-year history of overtime or bonus, that kind of thing. It's getting a little bit more flexible right now. If they have a 12-month history and their job, looks like it's stable, we can kind of make those judgment calls now, which
Is
is
that,
really
Fannie
nice.
Mae's okay with that? Fannie Mae's price?
He's never personally asked.
Oh, okay.
Nothing's come back.
They take turns with each other
Yeah.
on it, but yeah.
Yeah,
And the
you know,
guidelines still say 2 years. It's
2
just
years.
that there's exceptions basically for.
Or like we may go back further to a previous job.
job and say they've had a 5-year previous.
Yeah. Previously, they did straight commission and then they had, they were self-employed for a year and now they've been on their current job a year and they're commission again.
And
So
if
we
they're
would tie it
working with a
together.
Keller Williams agent, very.
Yeah.
I wonder how that no tax on tip will play into that. I mean, I know they have to,
Good thing.
declare that, but I mean. I
Well, we
wonder
go by
how that will-
gross.
Yeah, we go by gross every
It
time.
would, yeah.
It wouldn't
When we're
affect.
calculating someone's income, it's before taxes that we're
Right.
looking at, not after. So,
As long as it's documented. If it's, under the table, we can't see it, we don't know.
Yeah.
If it's not documented, it doesn't exist.
Right.
What other challenges do you see, like files? Gosh, I'm gonna turn over these guys. Maybe assets.
Assets, that's what I was gonna say. The biggest thing, and probably the worst part of my job is that I don't like going through bank statements because my job, I'm charged to go through the bank statements, look at every little line item, see if there's a payment they've made, say to Citibank or something, but there's not a Citibank on their credit cards. And then you can say, oh, is there a debt I don't know about? That kind of thing. Large deposits, if it's more than 50% of their income, I have to document what is this deposit. Do I personally care? No. I don't care how they spend their money or what it is.
I don't care at all.
What if it's
But
cash?
I have to- Cash, if we can document how they save the money, sometimes it's okay. We prefer not cash because it's hard to document, really. So,
yeah.
yeah.
Also, I do want you to touch on as far as flexibilities that we provide versus other, big bank companies like the black and white underwriting versus our more common sense
Yes.
approach and
Yes.
kind of explain
Well,
that. to them.
yeah, so like to go back to what Sandy said earlier, if I'm like, oh, I'm a little concerned or I'm not sure, we talk it through and we figure out a way to make it happen. Whereas I've worked at big companies where it's just everybody's in an operations center and this is the guideline, this is your checklist. Nope, okay, and move on. You've got 20 other files to get through. We actually have conversations on a regular basis and
we
say, okay,
talk all the
let's figure this out. So,
Yeah.
Yeah.
I'm glad you brought up the underwriting thing because you guys try to make it work.
Yeah,
That's
absolutely.
key. And there's so
Yeah.
many, I just did one, Joy Safe and Deal, but I did one with a credit union who shall not name, but their initials are Georgia's own. And,
Say the initials, you said the name.
anyway, their underwriter, now, so I wanted to find out about this. Their underwriter was giving us guidelines for making the loan that I've never heard of before.
Isn't this the one
I even
that
asked Eddie
wanted
about
to
it.
finish the
They
basement?
wanted the guy to finish the basement off because he had hung some sheetrock and they said it wasn't finished. But that was underwriting.
Yeah.
So this was local originator, Texas processor, Minnesota underwriter.
Yeah.
None of them really talk to each other.
Yeah.
Even the loan officer was like, I don't know where this is coming from. What's the rationale behind something like that kind of?
It's just I think that was a mistake.
Yeah.
I think it was a total mistake by the end.
We
She
made
was
the loan.
nervous about the
Yeah,
basement
the
because
loan, yeah,
somebody
like
might
11
get hurt.
days, I think.
No, 9. Made it 9 days.
It's crazy. Like I worked for another company just for a mini break with Guaranty, and I had a loan customers buying on Lake Lanier, and the underwriter at the time wanted us to document that people don't bathe in the lake, and we're like,
But you document that.
Yeah.
We would have to lie.
That has nothing to do with payment.
Yeah, see, a lot of big lenders and our partner does it sometimes, but we don't pay any attention to them. But they put overlays because they go, this is a risk point, and we don't want to take it, and that's their prerogative. But the difference in Guaranty is we have our own relationship with HUD, we have our own relationship with
Right.
VA and with FHA. So, and Fannie and Freddie, they do negotiate my contracts, but I still have my own relationship with them. So we just kind of do what we think is wrong.
We've been known to call the
That's in there, there's some kind of
Yeah,
rating for
yeah,
that.
you have to have a rate.
yeah, and I mean if we need to, we'll call the agencies directly.
Yeah, we'll just
I've
call
called-
Fannie
I've
up and
called
ask
them,
them.
I've called Fannie.
And they love that. They go, okay. And if you get a really good one, just write down their name.
That's right.
Cell phone number.
Yeah, spoke to you then?
Yeah. They become a permanent part of our group.
Okay, you guys ask questions that have never been asked. Now you have a question. Open it up to the group, to an individual.
Yeah, like appraisals, what kind of turnaround time do you have now? And what are the rules so I guess you're not required to tell the seller, were you ever, what's the?
Tell the seller the value.
We would never tell
Just
them.
disclose, what's the? I
We would
guess-
never disclose it. The appraisal doesn't belong to us. It belongs to the customer.
They're the ones that pay.
That's the ones who pay for it. So we will give it to the customer, and the customer gets it within 3 days.
The buyer.
That's the law. The buyer.
The
excuse me.
buyer's not obligated in any way to tell
No.
the seller what you.
And they can give it to their agent, or they can give it to the seller, they can give it anyway, but we will never give it to the listing agent or the seller.
I just didn't know what to do.
No.
Now, some people break those rules.
They break those rules all the time, because I don't wanna get into a
We would.
contest with the seller. You're putting your customer in jeopardy by, I think, giving the appraisal to the seller.
Yeah, that's not.
Either one of
The only
them.
time they should ever see it is
Yeah.
if the appraisal comes in low.
Yeah.
Yes.
That-
Yeah.
If
I
it,
don't even know if they need to see it.
well, sometimes they ask for it, but
They do
At
own the
least the
property.
number.
Yeah.
Okay. And turnaround time on appraisals?
We'll do it within 5 days.
Really?
Well, Nikki's the. queen
Sometimes
of
we
it,
can get it
right?
easier. sometimes we can get,
Okay, let's put that in. What they're thinking is they're gonna put 5 days on that.
No,
No.
don't do that on financing contingency.
It has to be ordered.
But we have to order it, and that's what you need to be thinking when the contract's being written. Is, okay, it goes binding, it's 2 or 3 days before it gets to these people, then the customer's 2 or 3 days getting back to them. All of a sudden, 10 days have gone by and you've got an appraisal contingency that's up in 10 days. And it hadn't even been ordered yet. So just think in your mind, time-wise, from the time it goes binding, how many days do I really need to get this stuff done? Now, from the time we order the appraisal and we do it with a rush, we can have it within 5 days if you need it.
Sometimes one day.
Yeah.
But I mean, think about due diligence. If your buyer is negotiating repairs, they may not want to pay $500 something for the appraisal fee yet.
Yeah.
That all goes into account.
And so that's what you guys will do. You'll put a short period, but then you're like, oh, well, don't order yet because we're still in due diligence. We're negotiating repairs. It's like,
But the
okay,
clock's still
yeah,
ticking.
well, you know, then
For us,
Yeah.
the clock.
So ideally, what number would you want?
I'll take what I like.
60 days. would be-
You guys answer that.
Well, if you prep your buyers, then your buyers have their stuff together, that makes their job easier, everything faster.
A lot of it depends on closing date too.
Yeah.
I mean, if you're doing a 2-week closing, having a week as the contingency is not unreasonable. If you're doing a closing that, let's say, is 60 days out and they have their home to sell first, maybe don't do a week as the appraisal contingency. They may not even want to buy the appraisal to pay for it yet, you know? So a lot of it depends on that too, the closing.
Yeah, but I would say that really, now that we brought this up, that's probably our most difficult thing right there.
What's that? Just-
Appraisal contingency.
Next factor in your holidays too. We are in
Yes.
the second half of the year now,
That's
so
right.
please factor in your holidays.
Yes,
Yeah.
You don't want to
that's
be
it.
writing an amendment on.
Yeah.
If it's the Friday before Labor Day and you're feeling like, you know, because
Do
it's
not
coming up.
close on the Friday before
Oh,
Labor Day.
And you know that there's other days besides the 30th and 31st.
Yes.
Yeah.
So think about stuff like that. It affects the timeline. It affects the way that process.
We've been talking about that 40 years.
And Friday.
Yeah.
Yeah,
Like the Friday before Labor Day, if you put the binding date in, well, the odds are we're probably not going to actually get to do anything that Tuesday.
Yeah.
You're losing Saturday, Sunday, Monday, 3 days right there. And you've got an 8-day appraisal contingency, so just kind of think about calendar and your closing.
There is a step where you can take out your weekends and your federal holidays, so that's an issue. You can
There's
have
a
that too.
GAR form.
Yeah, well, you can write in the special
Yeah,
step,
it's
that contingencies, if it falls on a weekend or a
On a
holiday.
weekend
or holiday.
Or our.
And for the contracts, that's automatically.
Yeah, Florida, that's
Yeah.
automatic, but
Yeah.
here you can write that in special.
Right.
Not
Yeah.
actual.
And David Maxey
But
loves
that's
that.
stipulated.
There we go.
I think so, if not, I can ask Tiffany to get it for y'all, but yeah.
I've seen it.
What else? It's getting more popular. Ask some questions. Ask some hard news.
Well, the sellers have an effect on it too, because,
Sure.
you know, if I'm a listing agent and, you know, I do more listings than I do buyers, and they give me a 21-day appraisal contingency, I'm gonna push back. I want them to move it a little faster. I want that to be no more than 14 at the most, usually 10.
which is fine, as long as
If
they're
we
not,
get all-
they're
yeah,
not
they're
waiting
ready.
until after the inspection's been.
Right, I got you.
Oh,
I,
no,
under-
it's happening.
I totally understand that
Oh,
from
I
the
know.
buyer side, but as a seller, I'm trying to protect my guy.
Yeah.
And so there's gotta be a balance there somewhere.
I think it also helps if they've been talking to Nikki or Joy and gotten pre-approved and been talking to them and they have their paperwork and stuff, because that's less time between when the contract has gone binding and they can decide what loan program they're doing and move forward. That makes sense?
Okay, what else? Come on.
Are there any other tools you can give us for our buyers? Like, I know you kind of talked about, and I'm sorry if I missed the meeting where you talked about more, some of the permanent rate buy downs and that kind of thing. What kind of things can you give us, like closing costs? Should we ask for more closing costs where you can help us with that, or?
And I think with buy downs, it's a hot topic of another meeting. That's all everyone wants to talk about now. If the seller's paying a lot, that's when the buy downs, I feel like,
Work.
come into play. So yes, if you're a listing agent, I mean, instead of reducing the prices, I know everything thinks about price right now in your city and all that, maybe offer some incentive. Permanent buy downs they're costly. You know, we're doing temporary buy downs and sometimes permanent, but the permanent, I feel like it's more new construction. You have like a 20,000 or something. And it depends on the buyer. If it's a first time home buyer and they don't have enough money to close, they're probably going to need replacement costs. If they're more payment conscious, then we kind of start talking about buy down. So it's a whole conversation and trying to figure out what that person needs. I think number one, that I feel like if sellers were to offer more incentive right now, that would help instead of just automatically reduce the price. But I would also think about price point for an agent because with certain programs, their maximum seller contribution based on their down payment and the programs, all that comes into play too. Because sometimes you can't use all of the 20 or 25,000. Yeah, and that's my
And a lot of times the government will not allow us to let the customer to pay
right.
huge amounts of discount points. They just stop us, say this, we can't do this. So when the seller has it, we can use everything.
Like that one I had the other day.
Yeah.
I didn't have the seller in our system marked pay the big 20,000 on this.
Yeah, I mean, there was
And I had
9,000
it like, I
discount
thought it was gonna fail because I didn't have it marked that the seller was paying.
paying it.
Then my system was like, fail. No.
So
The
they don't-
buyer was
they don't
paying
like
too
the
much.
buyer paying it.
Well,
Yeah.
they feel they're protecting the buyer
It becomes a high cost.
because it
money.
becomes a usury high cost usury.
There's
So
a
what is that
percent.
limit, like, they start flagging?
It depends on the size of the loan. So I mean, you know,
There's
it's a
a
lot
lot.
of there. Yeah, but we have a system, of course, that tells us immediately. We call it Maven. It's failed Maven, and we know we got to read.
That's when we call egg.
That's when I go in. and
Yeah.
fix everything.
Because I did on that one. He's like, well, yep. You don't have it marked correct.
It comes in play more as far as it being an issue with a small loan amount.
Yeah.
And
It's always one of the harder.
What else? Like newer agents, anything y'all want to know? Like to help you? Anything on contracts they shouldn't do or should say or
They
the
do
red
everything right.
Everything's
fair.
repair. Like, did you don't want to?
Repairs.
Like, is there something?
Yeah, I mean, we love it when you just say seller paid closing costs now this instead of listing the home inspection, you know, with 50 items, electricity. Yeah,
And we do not want to see.
And you do not.
no,
The cleaner, more simple.
Yeah.
Better.
We just don't, we don't want anything in that file that anybody would question.
Do you actually have to see the inspection report, or is it just that you need to see that the repairs were done? You don't want to see it.
and it's really, no, we really don't want to see it. And really the only things we have to address if it's on there is health and safety issues. So, I mean, if it's a gutter or something, like, you know.
Only if it's a conditional appraisal.
Usually, or like I had a loan officer, one of our Tennessee loan officers emailed me yesterday and we had a property inspection waiver, so no appraisal required. But all over the contract, it said roof, like major issues. And I'm like, yeah. So then we would need just like a paid receipt showing it's been handled. I don't want an inspection or any of that.
Because the contract mentions there, I guess the seller's replacing rent, you want to probably see it.
Yeah, because then it could be a, you know, safety issue.
we would only document that it's been done. We wouldn't ask for.
Usually,
No,
the
I'm not sending an inspector out.
What else? Good question.
Yeah.
Any seasons, agents, y'all got some questions?
I would just like to add something to what Bob said in the beginning about like when you guys pre-approve somebody for a loan, you can guarantee that that loan is gonna be done. Of course, unless the buyer does something silly along the way. And it's always gonna be done on time as well. And in all the years that I've worked with you guys on different kind of buyers, they never miss a closing date.
I appreciate
And
that, John.
even there was one situation, one time I don't remember what my buyer did, but it was something silly with their income. And literally the day of closing, we were on a call with Glory, which was, I think she took over the position. And she was fixing it for us. So I was driving on the way to closing and she was still fixing it because it came up like last minute. I don't remember what it was. The buyer did something, you guys verified last minute, whatever. And she fixed the problem by the time we got to the closing table and I was driving and they had the problem fixed, the package was there, the corrected package, and the money was sent already. So they also send money before you actually, you still do that, right?
Yeah.
Yes.
Before you
If you can, if you can.
If you can. Yeah.
Are y'all ever
Most
sitting
of,
at-
most of my closings with you guys are where the money is already sitting there.
We tried on that,
Yeah.
with money.
Before we get to the closing table, so you don't have to spend another hour waiting on time.
You know, Joanna, the only one we kind of have trouble with is that 9 o'clock.
Oh, yeah, that's a good point.
Yeah.
9 o'clock's tough for
I
us.
don't like to sit at the table waiting on
Because-
I-
Because the money is making money where it is. So for us to pull it out a day early is kind of tough for us. So we do it real early in the morning.
Yeah, and if you ever talk to an attorney that's closing a loan that Guaranty Mortgage is processing, you ask them, they love it because these guys are thorough and they get it done. I mean, O'Kelly and Sorgen knows them well, and a lot of the local attorneys know you know really well. So I mean,
Sorry.
I just have like a question. In this country, mostly loan everything based on income grant. But people out there, they say, in Georgia, you can down payment like 30% or more. So income and credit. Now look like the market is about 40% more. And is that possible in reality? And how should I respond? Think about it.
For not using their income, is it, or
Yeah,
just because
say
they're putting in budget? I-
down payment
Because-
higher
okay.
than some amount. Your credit or income is no problem. So you can-
Well, you're talking about a collateral, a collateral loan.
I mean,
Stated income?
we have some bank statement programs for self-employed people where we just rely on deposit, where they have a lot of cash flow when we're not looking at their income. That's one scenario. That's another example.
I mean, really,
Investors
we're looking
are
at the whole
investing.
picture.
Yeah, yeah,
So
that's,
regardless, so say they're putting, 50% down, but they don't have any income, none, zero. That doesn't necessarily mean they're gonna
Yeah.
get approved. We look at everything. We look at the income, their, assets, their credit. We're doing the whole picture on most scenarios. So all of those things play a factor.
Sometimes there's assets we can use for income. We've done that before. I mean,
I just
Yeah.
keep the
if
budget
there's no
information on
credit,
that.
there's alternate credit
There's
that we
alternate
can
credit
use
that we can
also.
bill for the customer.
Yeah, like
Okay.
rental history, insurance, cell phone bill.
Did that answer your question?
I'm not sure it did.
in a general sense, loans from a lender, any lender, are all about risk.
Yeah.
Yeah.
So when you
So-
do something like that alone, that's why they have to put so much down. You couldn't do, when you're not looking at income at all, it's not a 3% down or 5% down. That's why you see 25, 30, like your example. Credit's good, they have a lot of money. So there are some options we can look at.
Yeah, I mean, we have a whole section of what we call non-QM loans that aren't going to Fannie, aren't going to Freddie. We're just holding those loans. And they're all, you ought to talk to Joy or Nikki about them. They're all really very different. One day out of bankruptcy. I mean, they're just all, and boy, you got to have a lot of money to get one.
Yeah.
You got to have a big down payment, but they're worth it until you get your life straightened out. And then,
Like Bob said, it's all about risk.
it's all about.
I'll have a customer say, I have an 800 credit score. So what do you mean I don't qualify for X amount? It's like, well, that's great.
But that's just
But
part of it.
that's just one of the factors that go into what amount we're qualifying someone for.
And if you have a person like that that's putting 50% down, let's say you put $500,000 down on a $1 million house, but they have no means, no verifiable means of making payments, the lender's gonna look at that and go, hold up. That's where you see hard money lenders and other sources that are not, what would you call it, conforming? They're not
Conventional.
Yeah, they're not conventional. That's,
Conventional.
but the interest rate on that, because of the risk, is gonna be.
It's gonna be a little bit higher.
Sky high.
Higher the risk, the higher the rate.
Yep.
And they were over, they've got a question, let us have any time. Glad to answer
But
those.
we love being here and thank you so much for letting us come.
Thank
talk to
you.
y'all.
Kim, do you have any?